Welcome to our channel. Today, we're embarking on an exploration of a topic that affects us all. The effects of lowering interest rates on the economy. It's a subject that's not only relevant to economists and policymakers but also impacts everyday people like you and me. Interest rates. The very words evoke a sense of financial complexity, don't they? But fear not. By the end of this video, you'll not only understand what lowering interest rates means but also how it shapes the economy and, ultimately, our lives. Segment 1. Understanding interest rates. Let's start with the basics. What are interest rates, and why do they matter? Well, think of interest rates as the price of borrowing money. When they're low, it's cheaper to borrow. When they're high, borrowing becomes more expensive. But who decides these rates? That's where central banks come into play. They adjust interest rates to influence borrowing, spending, and investment in the economy. Segment 2. The impact on borrowers. Meet Daisy and Alex, a young couple navigating the housing market. Like many, they're affected by changes in interest rates. When interest rates drop, like they have recently, Daisy and Alex benefit from lower mortgage payments. This frees up extra cash they can spend or save, stimulating economic activity. And it's not just homeowners. Lower interest rates also encourage businesses to borrow for expansion, leading to job creation and economic growth. Segment 3. The impact on savers and investors. But wait, what about those relying on interest income, like retirees? Lower interest rates can pose challenges for them. With interest rates at historic lows, traditional savings accounts and bonds yield less income. This prompts savers to seek higher returns through riskier investments, potentially destabilizing financial markets. Yet, for savvy investors, lower interest rates can create opportunities in the stock market and other asset classes, fueling wealth accumulation and portfolio growth. Segment 4. The macroeconomic implications. Zooming out, let's examine the broader implications of lowering interest rates on the economy. On one hand, lower rates stimulate demand, boosting consumer spending and business investment. On the other hand, they can spur inflationary pressures and weaken the currency's value, affecting international trade. It's a delicate balancing act for policymakers, navigating between stimulating economic growth and preventing overheating or financial instability. Segment 5. Looking ahead. As we wrap up our exploration, one question lingers. What lies ahead? With interest rates likely to remain a hot topic for years to come, it's crucial to stay informed and adapt to changing economic conditions. Thanks for joining us on this journey through the effects of lowering interest rates on the economy. Don't forget to like, share, and subscribe for more insightful content. Until next time, stay curious and stay informed.